Hey everyone, welcome to another video on my channel, and today in this video we are going to learn a new strategy called as pair trading. Pair trading, as the word suggests, usually involves two stocks. So it is going to be one stock where you are going to buy, and there is going to be a second stock which you are going to sell. So whenever the stock you buy moves more than the stock you sell, then you are going to make some profit. So now let us assume that you are actually going long on ICICI Bank and going short on HDFC Bank. So this is just an example. Now 1 month later, if ICICI Bank has moved up by 10%, whereas HDFC Bank has only moved up by 5%, then you are going to make a gain of 5%. So this is a broader sense of how pair trading works. You don't want one stock to fall and the other stock to go up. In pair trading, you want the stock you buy to go up more than the stock which you sell. On the other hand, let's say the market starts to fall. If HDFC Bank goes down by 10%, whereas ICICI Bank only goes down by 5%, still you are going to make a gain of 5%. That means broadly in pair trading, if the stock you are buying is relatively doing better than the stock you sell, you end up making profit. So now the question would be, how do we identify such stocks, and how do we enter such stocks, and when do we take our exit? So I'm going to explain everything in detail. First of all, how to identify and how to pick such stocks is what we are going to cover. So when we talk about picking stocks for pair trading, there are few important characteristics. The very first one is picking stocks from the same sector. It is very important that we make sure both the stocks what we pick belongs to the same sector. The reason is quite simple. Let us say I end up purchasing something from the banking sector and then I short something from the IT sector. It might happen that tomorrow there might be some really good news for the entire IT sector. All the IT stocks will start rallying, and on the other hand, banking stocks might not perform. In this case, even though you have identified a strong banking stock and a relatively weak IT stock, this pair is not going to be that great. So this is going to be sector specific, and news flow is actually going to make the particular sector go up or down. So that's the reason it is very important that we pick the stock from the same sector. For example, even if you are picking something from private banking space, it is important that we stick for another bank from the private banking space itself. The reason for not going behind public banks again comes down to a factor where, let's say, there is some good news for the public sector banks and private banks need not perform. So that's the reason, even if we are talking about banking space, it is important that we stick to the same sector, that is private banking space. So this is the first and the most important thing. The second most important thing is we have to pick the companies of the same size. So what do I mean by that? So in the IT sector, one, there is TCS, one, there is Persistent Systems. So Persistent Systems is hardly a 80-90,000 crore company, whereas TCS is 12 lakh crore company. So what you can see here is the size clearly doesn't match. So when you pick a mid-cap stock and a large-cap stock, there is a chance that the mid-cap stock can actually rally more than the large-cap stock, or also fall more than the large-cap stock. So the beta or the volatility of the mid-cap stock is going to be much higher than that of the large-cap stocks. So that's the reason it is better always for us to pick the stock which is of the same size. For example, if Infosys is moving up by 2 or 3%, generally you expect even TCS to move up by 2 or 3%. Whereas on the other hand, Persistent Systems can actually end up rallying 6 to 7% because it is a mid-cap stock. So that's the reason if you pick companies of the same size, then the movements are also going to be similar. So whenever we are doing pair trading, these two characteristics in our pair becomes really important. So now I am going to show you some simple pair trading ideas, so you can conduct further research on this and you can end up taking these trades. So I'm going to pick two stocks from the same sector and both are of the same size, where one is relatively stronger than the other. So before we move on to the screen recording, there's one very important thing. I have attached the account opening link of First Stock down in the description below. So you can actually end up clicking on that and get 2000 rupees free brokerage to your account. Not just that, we are coming out with very exciting products. Apart from FinTarget, we are also coming out with a new product for discretionary traders. So you will also get early access, and also it is going to be free to use if you have a First Stock account. So make sure you click on the link and open your First Stock account and start trading. So right over here, I have picked two stocks. One is HCL Technologies and one more is Tech Mahindra. So you can see that these two belong to the same large cap IT space and they are having similar market cap. So stocks like Tech Mahindra, HCL, Wipro, all of them fall under the similar category. So now let us observe the chart of HCL and Tech Mahindra, right? So when you take a look at chart of HCL from 2024 itself, you can see that HCL has seen a good rally. So starting from Jan 2024, HCL is up by almost around 16 to 17%. Whereas on the other hand, Tech Mahindra during the same period starting from Jan 2024 is hardly up by 1%. As you can see, there is a 15% differential between HCL Tech and Tech Mahindra. So the advantage here is even though it looks just like 15%, but when you're doing this with futures, you're going to get a leverage of 4 to 5x. That means whatever capital you would have deployed, you would have made 15% into 4, which is 60% returns on the capital which you have deployed, because futures always come with a leverage. So this is how you can use pair trade to actually make a gain. So this is one point of identifying relative strength. So you can see that HCL is gradually moving up, whereas Tech Mahindra is consolidating here from quite a while. So if you take a look at the daily chart of maybe from August, so you can see Tech Mahindra from July 2023 is almost at the same level, whereas on the other hand, HCL Tech from July 2023 has already seen a rally of 40 to 50%. Again, you can see clearly HCL Tech is relatively looking much stronger when compared to Tech Mahindra. What is the other sign? So you can see currently from February 8, 2024, that is from 20 days back, HCL is just consolidating in a very small range. Whereas during the same time, you can see from 8th of Feb, Tech Mahindra is actually falling. So while one stock is consolidating and the other stock is falling, you know for a fact that one stock is much stronger than the other stock. So this way you can identify stocks which are relatively stronger to the other. So now when I actually end up opening ICICI Bank and HDFC Bank, so you get to see something very similar. So now when you take a look at ICICI Bank, today it has given a fresh all-time high breakout. Forget about that. Even from 2024, you can see the stock has rallied 13%, whereas from beginning of 2024, HDFC Bank has actually come down. So it has been down by almost around 10%. So there's a clear differential of 25% between the banks. So not just that, you can see while HDFC Bank is still struggling to break its swing high, ICICI Bank is not just breaking swing high but also making a new all-time high. There is a clear difference between HDFC Bank and ICICI Bank, and ICICI is looking much more stronger than HDFC Bank. So we can also see one more thing when HDFC Bank made a peak during December 28th. So from here, HDFC Bank actually started to crash. So this is again you can see somewhere around 28th, 29th of December. So ICICI Bank did fall, but it consolidated. It continued to consolidate, whereas HDFC Bank just continued to crash. So you can see a clear differential between the strength, right? So this way you will get multiple stocks. So one more stock, if I were to show you, I can show you Hero MotoCorp and Bajaj Auto. So you can see this is the chart of Hero. So when you take a look at the daily chart, maybe we can simply see from 2024 January, right? So let me just zoom in a little. So from Jan 2024, which comes right over here, Hero Motor has just rallied around 10%. But starting from Jan 2024, which comes right over here, Bajaj Auto has rallied 20%. Again, there's a clear differential of 10%. So you can also see, again, you can see the relative strength. While Hero is crashing, even Bajaj came down, but relatively lesser than Hero. So you can see from the peak, Hero is almost down 11%. On the other hand, we can see while Bajaj Auto is coming down, it has hardly come down by almost around 7.3% compared to 11% in Hero. So there are multiple instances how you can identify stocks which are relatively stronger to the other. So again, Hero and Bajaj are of the same size. And for example, HDFC Bank and ICICI Bank are of the same size. And HCL Tech and Tech Mahindra are of the same size. So you can see what exactly we are doing here. We are picking stocks from the same sector of the same size, and we are seeing which is relatively stronger to the other. So one more thing, what you can also see is Tata Motors to Maruti. So you can clearly see the strength in Tata Motors is much more when compared to Maruti. So this is how you pick the stock which is relatively stronger and buy them in futures, and you pick the stock which is relatively less stronger and you sell them in futures. So buy the futures of the stock stronger, sell the futures of the stock weaker, and by this you end up creating a pair trade. So now the important question is, when do we actually exit or book profit in pair trading? So the answer to this is pretty simple. Whenever the stock which we short starts to show some relatively stronger move compared to the stock which we bought, we can actually end up booking the profit. So what do I actually mean by relatively stronger move? So let me just go to the chart of Tech Mahindra and HCL Tech. So you can see right over here. So if Tech Mahindra is actually going to break 1359, right? So, and on the other hand, during the same time, if HCL is unable to break the previous high, so you can see Tech Mahindra is recovering, but HCL is unable to break the previous high. So in that case, you can see Tech Mahindra has started to get relatively stronger when compared to HCL. So even if HCL is actually breaking the all-time high, and Tech Mahindra is actually breaking 1360 or 1370, then it is still fine because HCL Tech is already at an all-time high and Tech Mahindra is still trying to catch up. So the second scenario can be where Tech Mahindra starts to consolidate and slowly starts to go up, whereas HCL's Tech starts to show some weakness and starts to come below maybe something like 1500. HCL Tech comes down almost by say around 10%, whereas Tech Mahindra is only down by 3 or 4%, and it is not breaking this important support of maybe 1220 or 1200. So these are some important signs where one stock is starting to show relatively stronger strength or weakness compared to the other stock. So whenever you get to see such signs, you can very easily end up exiting the entire pair trade. So the trade which I have taken in HCL and Tech Mahindra is of a personal opinion. So make sure before you take this trade, you consult your financial advisor. This is no kind of recommendation. This is just something which I did the analysis and I felt that HCL is showing relatively more strength compared to Tech Mahindra. So I hope you have enjoyed this video. If so, make sure you hit the like button, share this video and also follow me for more.